Listen to me. If you are sitting on a gold mine, and by that I mean your home, and you're feeling house rich but cash poor, you are exactly who the banks are targeting right now. You've worked your whole life to pay off that mortgage. You've seen your home value soar in 2026, and now you're wondering, is a reverse mortgage the miracle solution to my retirement stress, or is it a deal with the devil? I want you to lean in because we're going to strip away the fancy marketing and get to the truth. A reverse mortgage is not a gift. It is not free money. It is a loan, a very specific, very expensive kind of loan that can either be a lifeline or a legacy killer. The question you have to ask yourself is this: do you want to leave your home to your children, or do you need that home to take care of you while you are still alive? Because you cannot always have both. Here's how it works. With a traditional mortgage, you pay the bank every month to build equity. In a reverse mortgage, most commonly the HECM, the home equity conversion mortgage, the bank pays you. You must be at least 62 years old, and you must live in that home as your primary residence. The bank looks at your age, the value of your home, and current interest rates, and they tell you how much of your equity you can tap into. You can take it as a lump sum, a monthly check, or, my personal favorite, a line of credit that actually grows over time. But here is the fear factor that keeps people up at night. Susie, will the bank take my home? Let me be clear. As long as you live in that home, pay your property taxes, keep up with your homeowner's insurance, and maintain the property, you own the home. The bank cannot kick you out. However, and this is a big however, the interest on that loan is not being paid by you every month. It is being added to the back of a loan. That means your debt is growing, and growing, while your equity is shrinking. In 2026, with interest rates still being a factor, that compounding works against you. If you stay in that home for 20 years, you might owe the bank more than the house is worth. Now, these are non-recourse loans, meaning you or your heirs will never owe more than the home is sold for, but it could mean there is zero inheritance left for your kids. Is it right for you? If you are 75 or 80, you have no intention of moving, and you are struggling to buy groceries or pay for healthcare, then yes, it can be a godsend. It allows you to stay in the place you love with the dignity you deserve. But if you are 6'2" and just want a new car or a vacation, absolutely not. You are tapping into your emergency bucket far too early. If you take a reverse mortgage today, and then in 10 years you need to move into assisted living, you might find that after the bank is paid back, you don't have enough money left to pay for the care you need. Here is your actionable takeaway. Before you sign anything, you must go through HUD-approved counseling. Don't just do it because it's required. Listen to what they say. Compare the costs. A reverse mortgage has high upfront fees, origination fees, mortgage insurance premiums, closing costs. If you only plan to stay in the house for 3 or 4 more years, a reverse mortgage is a terrible, expensive mistake. You would be better off downsizing now. Understand this: your home is your security. If you use a reverse mortgage, use it as a last resort to secure your life, not to fund a lifestyle you can't afford. Stand in your truth, look at your numbers, and ask yourself, am I protecting my future, or am I just spending it? With that said, thanks for watching, and until next time.